In the next session, we'll hear from Brent McIntosh, the Undersecretary for International Affairs at the U.S. Department of Treasury. Brent will join us in a fireside discussion moderated by Michael Piwowar, Executive Director of the Center for Financial Markets at the Milken Institute. Let's go now to the Undersecretary McIntosh and Michael for their discussion on the international response to the COVID economy.
Hello, and welcome to another great session at the 2020 Milken Institute Asia Summit. My name is Mike Piwowar, and I'm the Executive Director of the Milken Institute Center for Financial Markets. And I have the distinct pleasure of serving as the moderator for today's conversation with Brent McIntosh, Undersecretary for International Affairs at the U.S. Department of Treasury. In this role, Secretary McIntosh serves as the Principal Policy Advisor to the Secretary and Deputy Secretary of the Treasury on international economic matters. Among his many duties, he leads Treasury's efforts on international financial services issues, trade and investment policy, banking and securities, and U.S. relations with multilateral development banks such as the World Bank, the International Monetary Fund, and the Asian Development Bank. He also leads Treasury's coordination with the G7 and G20. We are extremely grateful that Secretary McIntosh is with us today. Mr. Secretary, there's been a historic response by the U.S. government to address the economic effects of the COVID-19 pandemic. And I understand you worked intensely on Treasury's coronavirus response. Tell us about Treasury's role in the economic response.
Thanks, Mike. It's a pleasure to be here with you today, and always a pleasure to participate in a Milken Institute event. So delighted to be here and to talk about the response of the U.S. government to the economic effects of the pandemic. When we look at the things that our Treasury Department has had to do during the pandemic to address the economic effects, although my title is one that has international in the title, there have been a series of domestic actions and a series of international actions. And the truth is, given the nature of the pandemic, it's been all hands on deck on both of those things. So my office has actually done a good deal of work on some of the domestic issues as well. And it's worth thinking about those a little bit because they have had very substantial international consequences for the global financial system and the global economy. When the CARES Act here was passed in late March of this year, which was a more than $2 trillion relief package, there were any number of different programs under that legislation, which are well known to many people, and I won't recite them, but it's worth noting that it was the speed and scope with which that legislation was implemented was really unprecedented in American history. We had, within 10 days, we had payments out to 80 million Americans for a total of $150 billion. Ultimately, that number came to about 160 million payments, over $270 billion of payments to Americans. Our Small Business Administration put out what would be in an ordinary pace of lending, 14 years worth of lending within 14 days of the legislation. So a truly remarkable effort that everyone here at Treasury had to chip into. And then you had the set of programs that we worked on with the Federal Reserve here, the emergency lending facilities to backstop funding markets, especially short-term funding markets, and support the flow of credit to households and businesses, which really, if you look at what happened subsequent to the March market turmoil, it really has restored market function. In many cases, the mere existence of those programs had a very beneficial effect on market function, even where they didn't need to be used at scale. Their simple existence was a reassurance to the market. And then you saw in the data that based on the various programs we put in place to support the economy, the U.S. recovery began after only about 2 months. We saw a historically high unemployment rate in April with a 14.7% unemployment, which is the highest in post-war history in the United States. And we've already regained more than half of those jobs over the course of the recovery. So we're very pleased with the recovery. We're, of course, watching carefully to ensure that it continues. But from our perspective, that recovery has very much benefited Americans certainly, but it also, when you look at the effect it has had on financial stability globally and the international economy, it has had knock-on effects around the world that we think are extremely beneficial.
Yeah, so you mentioned, right, the CARES Act, the Coronavirus Aid, Relief, and Economic Securities Act, was approximately $2 trillion in economic stimulus. And just to put that in perspective for folks, it's the largest ever economic stimulus package in U.S. history. It was about 10% of the U.S. gross domestic product, and it was about 2.5 times larger than the economic stimulus package that was passed in 2009 as part of the Great Recession. So you use the phrase unprecedented, and that's a phrase that's used a lot lately, but then it's not overused in this particular case. Now let's turn to the international aspect, right? You've played a major role in the global economic response. In fact, you're Treasury's top diplomat. So what's been the international coordination been like at the G7 and G20 levels?
Well, it's been really both fascinating to see the adaptation that has had to take place and heartening to see how well we have adapted to a virtual format for all of our multilateral engagements. The job I'm in now was one where probably every couple of weeks I was on international travel a couple times a month up until February. And in fact, in February, I was in Asia and then in the Middle East on 2 separate trips. And then everything came to a screeching halt in terms of the international travel. And like every other institution, it seems the world over, those multilateral engagements, whether it be the G20, where the Saudis have the presidency this year, or the G7, where the United States has the presidency this year, or various other things, including the IMF and World Bank, the Financial Stability Board. Those things all went virtual. We all moved to WebEx, just as everyone else did. So in some ways, I ended up running international affairs as an entirely domestic basis. But the pace of those interactions, actually, despite the fact that we had to go virtual, the pace actually went up dramatically for obvious reasons. Those institutions had to prove their worth and respond to the conditions around the world. And they really have, I would say. The institutions that were created in the wake of the global financial crisis, including the Financial Stability Board in its current form and the G20, did a very nice job with moving to a virtual format and shifting their priorities to the current historic challenges that the world faces. And so they worked hand in hand. We worked hand in hand with our international partners to ensure that not just our response, but the responses around the world, the speed and scale were commensurate with the challenge posed by the pandemic. And if you look at it, I mentioned earlier that the market conditions have eased, the data are trending in the right direction. There's no question that collaboration has been beneficial. While that collaboration has been beneficial and while the conditions are trending in the right direction, we do think that it's important to not be complacent at this point, to not declare victory too early. There are needs for continued vigilance in monitoring both the pandemic itself and its economic effects, and there's a need for additional economic aid that will be a bridge between where we are now and the time of widespread vaccination, which we're hopeful will be very soon. It's been it's been a bright side to a dark year how quickly the vaccination the vaccines have been developed and how quickly we've managed to move toward. Talk about unprecedented. It truly is nothing short of miraculous the way the vaccine makers have worked on the development of these vaccines and the pace at which they've been done. If you look back at the predictions of when vaccines would be available versus the development status right now, it's really very remarkable. So we're hopeful that we're cognizant that there is going to be a need for a bridge between today and widespread vaccination, but we're also hopeful given the pace of vaccination developments.
One of the major concerns during COVID-19 is that beyond the G7 and G20 economies is that the effect that it's had, the disproportionate effect on some of the most vulnerable countries around the world. And this was one of the drivers behind the G20's efforts to address less developed countries' debt situations. So please tell us about those initiatives. Why were they necessary, and how do you see them continuing forward?
Yeah, it's a great question, and it's something we've been very focused on here at Treasury in collaboration with our international counterparts, especially various finance ministries around the world and the IMF and the World Bank, because what the pandemic has done is it has really revealed and exacerbated vulnerabilities in many of the poorest countries. It's exposed vulnerabilities that already existed and made them worse. Many of those countries had faced debt situations that were building up in a problematic way over time, but the pandemic confronted them with a really awful choice between, for example, servicing their sovereign debt, continued payments to service their sovereign debt on the one hand, and engaging in the fiscal response necessary to support their economies during the downturn. And so one of the things the international community came together to do, initially proposed by David Malpass at the World Bank and Kristalina Georgieva at the IMF, and then endorsed first by the G7, where we worked with our counterparts to say that the G7 would be supportive of this effort if the G20 countries all were supportive, and then endorsed by the G20, was what we call the Debt Service Suspension Initiative, where the poorest countries could request that their debt service be suspended for a period initially of 6 months, so that they could devote the finances during that period to their fiscal response. We have extended that initiative another 6 months recently. 46 countries have taken advantage of it to the tune of over $5 billion worth of relief. But we recognize as well that merely suspending debt payments for a period of time is not going to be sufficient for every country out there. There are a number of countries where, because of already unsustainable debt levels exacerbated by the pandemic, they're facing a need for debt relief. And so we negotiated through the G20, and the G20 finance ministers and central bank governors recently adopted, and then the leaders of the G20 countries recently endorsed a new common framework under which countries will be able to seek debt relief from their major creditors. Sovereign debt relief has traditionally been done through the Paris Club, which does not include China as a member, and yet China is the largest lender into a number of these countries. So it's crucial that China be a participant here. And for the first time, China has signed on to this effort. It's the first time they've signed on to a multilateral debt relief effort. And so we're very hopeful that this debt relief effort will allow countries to come to their major creditors and seek debt relief on a basis that's fair across the board, where there's no free riding, there's good burden sharing or commonality of treatment across the various creditors. And that will get some countries to a place where they're not in the distress they're currently in. But of course, merely agreeing to the framework is only step one. The proof of the pudding is always in the tasting. And so we're going to need to see, do countries actually participate fully and transparently here? Will the Chinese banks in particular participate in a way that is robust and transparent to help out the countries that desperately need this aid? So it's going to require continued vigilance. Negotiating this is only the first step, and making sure that we are carefully monitoring whether it gets implemented fully and transparently is going to be an effort over a period of months and years.
Yeah, you mentioned earlier the Financial Stability Board, and you represent the United States on the FSB, which is an international body that monitors and makes recommendations about the global financial system to promote international financial stability. What role has coordination between financial authorities played in the crisis response, and what are some of the key lessons learned for the international financial sector?
Yeah, a great question. One thing I would say is that institution, which, as I mentioned, came to its current form after the global financial crisis, has been a very useful body for coordinating among financial authorities since the pandemic. And part of that is, although we've been doing it virtually, part of that is because that group has been meeting for years, and the participants know each other, and they developed a common sense of trust and confidence in one another that they're going to be able to pull off the coordination necessary to support financial stability in the face of challenges that really require a coordinated response, an international response. And so you've seen over the period of the pandemic the successes of the Financial Stability Board under the leadership of Randy Quarles, who's the vice chair of the Fed here, a real set of policy successes, which are primarily identified in the fact that there haven't been a certain set of problems, or that those problems have been truncated relatively quickly. So when you talk about, for example, we were talking earlier about the strains in dollar funding markets that happened earlier, and the spike in premiums for short-term dollar funding. You could see coordination among the major central banks to ensure that got solved quickly through dollar swap lines, and it very quickly returned to pre-crisis levels, which was a real testament to the coordination that happened among central banks there. Similarly, one of the things we realized very early on during the pandemic was that international financial institutions were going to face business continuity challenges in a way that they never had before, because of the need to get workers in to support the functioning of those institutions, and the fact that often the workers supporting those institutions may be sitting in one country and supporting another country. And so one of the things the Financial Stability Board did under Vice Chair Quarles' leadership, and we worked a lot on here at Treasury as well, was ensuring that the key participants in the work of those financial institutions got to be deemed essential workers, so that the decisions about who is an essential worker in one country did not lead to a situation where you were shutting down a global financial institution unwittingly. And that really, it took a huge amount of around-the-clock work for a while, but the success of that is that those institutions remained functioning around the world, despite the challenges of getting workers to work. So really another of the mechanisms from the global financial crisis that I think has proven its worth. We're very pleased with the work that's been done in the collaboration in that body. And now that body is moving, while continuing to look at, conduct surveillance of the possibility of additional concerns for financial stability, is also beginning to look at the lessons learned from the crisis and think through what are the changes we can make to the international financial architecture and to the plumbing to ensure that we don't have, for example, a repeat of the March market turmoil should another similar event affect the global financial crisis or financial system. And so there's a lot of work being done to study what happened and how we can address it.
Wow, I mean, the COVID-19 crisis response, both domestically and internationally, is just it's amazingly vast, and it's just a testament to your great public service and hard work that you're able to do that. For my last question, for the last couple of minutes here, I'd like to talk a little bit about how the pandemic has affected the pre-COVID agenda, right? So from the crisis in Argentina to Brexit, international trade deals, the world keeps turning. So given everything that you have to do with the COVID-19 crisis response, how have you balanced that with Treasury's many other responsibilities?
Yeah, one thing that struck us very early on, Mike, in the crisis was, and has continued to be true, is how a set of priorities that we were already working on have only become more urgent during the crisis because of the pandemic, frankly. One of the things we've been working on for years at Treasury is ensuring that the poorest countries, you mentioned Argentina, but also very poor countries in Africa. You have some emerging markets economies, ensuring that they have transparency and sustainability in their debt situations. As we discussed earlier, that has only become all the more important during the pandemic because of the exacerbating effect of the pandemic. And so we've actually, while there have been real problems, we've also made progress in, for example, bringing the Chinese into the common framework to ensure greater priority on debt transparency and sustainability. And we saw other items like that as well. Another of the items we were working on was, for example, investment security, our CFIUS regime, Committee on Foreign Investment in the United States, and reforming that. That's only become more important during a time when asset valuations were depressed at some point, and if there were malign actors seeking to use investment for problematic purposes, they probably thought we were distracted, and it made it all the more important that we not be distracted during that period. And so we've worked very closely with our international partners to ensure that during this period, we continue to have robust investment screening to ensure that malign actors cannot use the pandemic as an opportunity to pursue problematic aims.
Yeah, Secretary McIntosh, thank you so much for taking time out of your incredibly busy schedule to be with us today. And thank you for your many years of public service, especially in your current role, managing so many key global challenges. I hope you and your family have a happy and healthy holiday season. Thanks.
Thanks to you as well. It was a delight to be with you today, and thanks for taking the time to listen.
Thank you, Undersecretary McIntosh and Mike, for that discussion on the international response to COVID-19.